Okay, let's talk about 2026, because there's a massive tug of war going on between Washington, Wall Street, and, well, your wallet. We've got a huge midterm election coming up, and it seems like the one thing everybody can agree on is that the economy is the issue. So, what does that actually mean for your money? Let's get into it. It really all boils down to this. The Brookings Institution points out that ever since the pandemic, the number one thing on everyone's mind has been the cost of living. It doesn't matter if we're talking about gas, groceries, or rent. People are feeling the squeeze, and they want leaders to do something about it. And that's really the central question for us today, isn't it? With so much anxiety swirling around our personal finances, how is this all going to play out for the wider economy and the markets, especially in a year with so much at stake politically?
To figure that out, we've got to first understand the mood of the country and, the historical patterns we're up against. And it's safe to say this is a midterm year filled with a whole lot of worry.
Now check this out. Polling from Ipsos shows just how deep this economic anxiety runs. For Republicans and independents, the cost of living is hands down the number one issue. For Democrats, protecting democracy edges it out, but the cost of living is right there at number two. So the big takeaway is that money worries are a huge motivator for voters, no matter which side of the aisle they're on. And this widespread anxiety, well, it lines up with a pretty tough historical trend for the markets. This chart from Wealth Enhancement lays it all out. It shows stock market performance over the 4-year presidential cycle. And just look at that midterm year column. Oof. Historically, it is the weakest year of the 4 by a long shot. We can actually put a name to it, the midterm slump. And the numbers are pretty stark. Since 1990, these midterm years have had the absolute lowest average return, just 3%. But what's even more telling is they have the deepest sell-offs. We're talking a median drop of 19% from the peak at some point during the year. That is a serious historical headwind to be sailing into. So you have worried voters and a tough market history. What does Washington do? Well, they respond. And they respond with a massive policy aimed at putting money directly into people's pockets. The government's answer to this whole cost of living crisis is a huge piece of legislation. For our purposes, we'll just call it the One Big Beautiful Bill Act, or OBBBA for short. It's designed to be a very direct, very visible response to all those affordability concerns we were just talking about. So, how big of a response are we talking about? Well, according to MFUG Americas, this bill is set to pump an extra $150 billion into the economy, all through tax refunds. I mean, that is just a massive injection of cash. And here's what that actually means for people. That giant number translates to an estimated 44% jump in the average American's tax refund. Now, this isn't some abstract economic theory. This is real, tangible cash that's going to be hitting bank accounts in early 2026, right before those midterm elections. But, and this is a big but, the money isn't spread around evenly. This chart from MUFG breaks it down for us. While pretty much everyone gets a little something, the biggest percentage boost to after-tax income actually goes to the highest earners. The top 1% see a 1.2% bump, while the bottom 20% only see a 0.2% change. And this is a really crucial detail because it raises the million-dollar question for investors. Where is all this money actually going to go? Is it going to pay off debt, cover bills, or will it flow into spending and maybe even the stock market? So this massive stimulus is what really sets up the central conflict for 2026. It's like a collision course between these super optimistic market forecasts and those very real, very tough historical and political headwinds we just talked about. It's really a tale of two completely different futures. And here it is, that tug of war all on one slide. You've got the bull case, which is what firms like Goldman Sachs are talking about. Strong global growth, great corporate earnings, the AI boom. And then you have the bear case, which points to history, that midterm slump, those deep drawdowns, and a whole lot of uncertainty from geopolitics and the Fed. So which side is going to pull harder? And let me tell you, the bulls are feeling very confident. This quote from Goldman Sachs really sums up their whole argument. They see the U.S. economy in a great position to outperform everyone else, specifically because of these tax cuts and the hope for easier financial conditions. But that rosy forecast doesn't exist in a bubble, right? To get the full picture, we have to look at the specific political risks that could absolutely throw a wrench in the works. Morgan Stanley's analysis really boils it down to 3 huge risks investors need to keep a close eye on this year. Geopolitical risk, what they call an embattled Federal Reserve, and just ongoing uncertainty when it comes to trade policy. Let's unpack those a bit. First, geopolitics. Tensions, say with Iran, could lead to more defense spending, which would be good for defense stocks. On trade, even though the Supreme Court might rule one way, the administration always has other tools to impose tariffs, so that uncertainty isn't going anywhere. And then there's the Fed. An embattled Fed is basically one that's caught between a rock and a hard place. Politicians want low interest rates to keep voters happy, but high government debt and maybe a spike in oil prices could force the Fed's hand to keep rates high. And that conflict creates huge uncertainty for everything from the bond market to your mortgage.
All right, so after looking at voter anxiety, market history, this giant stimulus, and all the political risks, what's the bottom line for 2026? What does this all mean?
Okay, here's how this could all translate to your portfolio. Those big tax refunds, they could give a nice boost to consumer staples, companies that sell the stuff we buy every day. Geopolitical tensions could be good for defense stocks. The bond market, on the other hand, could be in for a really bumpy ride. But the key insight from Morgan Stanley's analysis is that what investors really crave is clarity. Once we get that clarity on policy, maybe in a sector like healthcare, companies in things like insurance and biotech could really take off.
So if you strip it all away, this is the story of 2026 in a nutshell. You have this unstoppable force, a massive government stimulus hitting right at the start of the year, and it's running headlong into an immovable object, the historical pattern of a tough, volatile midterm market.
Which leaves us with the ultimate question. We have this historic amount of stimulus crashing right into decades of market history and political uncertainty. So will 2026 be the year that finally breaks the pattern? Or will history win out again? That, right there, is the billion-dollar